All right, so you're thinking about getting into IPOs.
Specifically, Indian fintech companies.
Yeah. There are a couple that have caught your eye, huh?
That's awesome.
One Mobikwik prospectuses.
They can be dense.
Yeah, they can be a bit like trying to decipher ancient Sanskrit sometimes.
Right.
So we are going on a deep dive with you today.
Into these two prospectuses.
Yeah, we're going to be dissecting everything.
From their financials to their business models.
And hopefully by the time we're done,
you'll have a much clearer picture
of what they're all about.
And if it's the right fit for your portfolio.
Exactly.
We're calling them Company A and Company B.
For now.
What's interesting right off the bat is both companies are riding this huge wave
of digital growth in India.
The government is really pushing for a digital economy, which could be a massive boost for companies like these.
Yeah.
But of course, every investment has its risks.
Of course.
So we need to dig deeper into the specifics of each company, starting with their financials.
Okay, let's unpack those numbers.
Company A's financials jumped out at me.
Yeah.
They actually turned profitable in fiscal 2024.
Oh, what?
Going from a loss of $1,281.62 million in fiscal 2022 to a profit of $140.79 million.
Okay.
That's a pretty impressive turnaround.
Yeah, for a young tech company.
For a young tech company, don't you think? I do. The question is...
what drove that shift?
To profitability.
Right.
Was it a one-time thing, or...
or have they made fundamental changes to their business?
Exactly.
Okay.
One thing that stands out is their EBITDA margin.
EBITDA margin.
Which essentially...
is a measure of how much profit they make from their core operation.
Exactly.
Wow.
And it's improving.
That's a good sign.
That's definitely a good sign.
Yeah.
But they're also spending a lot on growth, which makes sense for a company at this stage.
Yeah. Their customer acquisition costs are going up.
Right.
Meaning they're having to spend more to attract each new customer.
Exactly. It's classic spend money to make money.
Right.
They're investing heavily in research and development and expanding their payment device business, which could pay off big time down the road.
Yeah, but also adds to the risk.
Yeah.
What if those investments don't pan out?
Exactly. What if those investments don't pan out as expected?
Okay, so potential for growth.
With some risks involved.
Makes sense.
Yeah.
Let's look at their business model.
Okay.
What are they actually doing?
Their focus is squarely on India's consumer internet market.
Okay.
Which includes everything from online retail and gaming to, of course, fintech.
Right.
This market is projected to hit a whopping
USD 600 billion?
USD 600 billion.
By fiscal 2028.
By fiscal 2028.
Wow.
So the potential is huge.
So they're betting on the rising tide of digital consumers in India. Makes sense.
Right.
But how are they trying to stand out?
In such a crowded space.
Yeah, the crowded space.
One key area for them is digital lending. Specifically, buy now, pay later plans and personal loans that are becoming super popular.
Yeah.
Interestingly, they're not actually issuing the loans themselves.
Whoa.
They've partnered with other financial institutions to do that.
So they're more like the middleman.
Yes.
Connecting borrowers and lenders.
Yeah.
What's the advantage of that model?
It allows them to scale quickly without taking on all the risk of lending themselves.
Right.
But as you might imagine,
it makes them reliant.
It makes them heavily reliant on those partnerships.
Yeah. I could see how that could be a double-edged sword.
Absolutely.
What happens if one of those key partners decides to go solo?
Right.
Or team up with a competitor?
Yeah.
It feels a little like building your house on someone else's land.
That's a great analogy.
Yeah.
And it's a real risk they acknowledge in the prospectus.
Okay.
Now, speaking of risks.
Yes.
We need to talk about a couple of red flags.
Uh-oh.
That popped up when we were digging through Company A's financial history.
Yeah.
Remember we mentioned their lending partnerships?
Yeah.
Well, they used to provide financial guarantees to those partners.
What does that mean?
Basically promising to cover losses if borrowers defaulted.
So they were taking on some of the lending risk after all.
Yes, they were taking on some of the lending risk.
What happened?
The Reserve Bank of India, or RBI, stepped in.
Okay.
India's central bank.
Right.
And put a stop to that practice.
Oh.
Now they're only allowed to guarantee a tiny fraction of the loan portfolio.
How tiny?
Just 5%.
5%?
That could put a real dent in their revenue from lending.
That's a bit concerning.
It is definitely a bit concerning.
Anything else that raised a red flag for you while we were digging?
Yeah, there was a mention of some untraceable records from a previous fundraising effort.
Oh.
Now they claim it's all been sorted out,
Okay.
but it does raise some questions
It does.
about their financial transparency in the past.
Wow, that doesn't exactly inspire confidence.
No, it doesn't.
Okay, so we've got a company with some impressive growth,
Right.
a focus on a booming market,
Yes.
but also some reliance on partners
Uh-huh.
and a couple of concerning blips in their financial history.
Yeah.
It's definitely a mixed bag.
It's a mixed bag.
Now let's turn our attention to Company B.
Right.
What stood out to you?
When you first looked at their prospectus,
Yeah.
well, the first thing that jumps out is the sheer amount of money they're trying to raise.
Yeah, how much we talking?
With this IPO, I don't, $5,720 million.
$5,720 million.
That's a massive number.
Yeah, it is.
And it tells you they have big plans.
Yeah, that's a lot of cash. Sounds like they're not messing around.
Yeah.
What are they hoping to do with all that funding?
Their prospectus paints a picture of massive growth in the digital payments market.
Okay.
Not just in India, but globally. They're projecting a staggering USD 60-70 trillion.
Wow. Trillion.
In transaction volume by fiscal 2028.
Okay, those are some seriously ambitious projections.
They are very ambitious.
But let's be real.
Okay.
Projections are just that. Projections.
Projections are just projections, yes.
They're not guarantees.
No.
So.
We need to look at the competitive landscape.
Go.
Who are they up against in this digital payments arena?
Yeah, it's a big arena.
They're facing some stiff competition, both from established players in India and from global giants.
Right.
They specifically mention PhonePe and Paytm as major competitors.
Okay.
And of course, there's always the looming presence of companies like PayPal.
Right.
So how are they planning to carve out their own space in this crowded market? What's their unique selling proposition?
What are they doing differently?
They're betting big on financial inclusion, specifically targeting users in Tier 3 and below cities.
Okay.
The areas beyond the major metropolitan hubs.
Okay.
They call this their Bharat strategy.
Bharat strategy.
And they claim to have the largest share of digital dispersals in these regions.
Okay, so they're not just chasing the same urban users as everyone else.
No, they are going after a different segment of the market.
Interesting. But of course, no investment is without its risks.
Of course, there are always risks.
What are some of the potential downsides they highlight?
In their prospectus, one of the biggest risks they acknowledge is the ever-present threat of security breaches and data theft.
Yeah.
That's a reality for any tech company these days.
Especially one dealing with sensitive financial information.
Exactly, but especially one dealing with sensitive financial information.
Yeah, that's a risk that definitely can't be ignored.
Definitely not.
Anything else that jumped out at you as a potential concern?
As a potential concern. They also point out their reliance on mobile operating systems like Android and iOS.
Okay.
If they were to lose access to those platforms or face restrictions, it could severely hamper their growth.
Right, because their entire business model depends on people using their app.
On their smartphones.
Yeah.
Exactly.
Because we've got another company with ambitious plans.
Yeah.
A focus on a specific market niche.
Yes.
But also facing some significant risks.
Mm-hmm.
It's fascinating how different these two companies are.
Yeah.
Even though they're both operating in the same broad space.
Exactly. It really highlights the importance of going beyond the surface level and digging into the specifics of each company before making any investment decisions.
So let's recap what we've learned so far.
Okay.
We have Company A already turning a profit.
Right.
But with some questions about their lending business and past financial practices.
Yes.
And then we have Company B raising a ton of capital, targeting a unique market segment, but also facing some stiff competition and security risks.
Yes.
It's a lot to process.
It is a lot to process.
But hopefully we're starting to see a clearer picture of these companies and how they operate.
Absolutely. And remember, this is just the beginning of our deep dive.
Right.
We'll be back after a short break to delve even deeper into these prospectuses.
Okay.
And uncover even more insights.
Welcome back.
We're continuing our deep dive
into the world of these two fintech companies.
And trust me,
there's a lot more to uncover.
Those prospectuses are like treasure chests.
Overflowing with information.
And we've got the map.
Okay.
We've looked at the big picture.
Right.
But now it's time to zoom in
on
some key details that really reveal these companies' inner workings.
So we're putting them under a microscope.
It's like we're putting them under a microscope.
Okay, let's start with Company A.
Okay.
Their prospectus dives deep into their performance indicators.
The metrics.
The metrics that tell the story of their growth.
In their strategy.
Okay, let's break down those metrics.
Right.
What kind of numbers are we talking about?
One that really stands out is their platform spend GMV.
Platform spend GMV.
Which basically means the total value of all the transactions happening on their platform.
Okay.
It's a good way to gauge user engagement.
Right.
And see how much money is actually flowing through their system.
Okay.
In fiscal 2024.
Yeah.
Their platform spend GMV reached a hefty euro 476,777.30 million.
That's a lot of zeros.
That is a lot of zeros. That's a pretty impressive figure.
It is.
Especially considering
they're competing in a market as crowded as India's digital payment space.
Right. It's a very crowded space.
It really is. And it's not just about attracting users.
Right.
It's about building a robust ecosystem.
Okay.
They're also highlighting the growth of their merchant network, which is crucial for any payment platform.
Yeah.
After all.
Yeah, what good is a digital wallet if there aren't enough places to use it?
Exactly.
They're like having a fancy credit card that nobody accepts, so they've managed to bring on board a wide range of merchants.
Okay, from small businesses to big brands.
Yes, and they're strategically focusing on those tier 3 and below cities.
Right.
That we talked about earlier.
Right, their Bharat strategy.
Remember their Bharat strategy?
Right, going after a wider swath of the Indian population?
Yes.
Okay, so their growth metrics look promising.
They do.
They're strategically expanding their reach.
Yes.
But what about the actual products they're offering? How are they trying to attract users and get them spending?
Well, they're pushing those buy now, pay later and personal loan products pretty hard.
Okay.
Which makes sense.
Makes sense given their focus on digital lending.
Given their focus on digital lending.
Yeah.
They've even given these products catchy names like Mobikwik Zippy.
Mobikwik Zippy.
And Zippy EMI.
Okay, Z by EMI.
To appeal to a younger audience.
So Mobikwik ZP sounds like it's targeting the smaller everyday purchases.
You gotta think of it like a digital interest-free line of credit.
For those impulse buys.
Yes, for those impulse buys or when you're a little short on cash.
Yeah.
And their prospectus boasts that 90.30% of Mobikwik ZIP users come back for more.
90.30%.
That's a pretty strong indication that people are liking what they see.
Wow. Yeah, that is a good sign.
It is a good sign.
Okay, and what about Zippy EMI?
Zippy EMI is for those larger purchases, like electronics or appliances, where you need a longer repayment period.
Okay.
And of course, it comes with an interest rate. So they're making money on those loans.
Makes sense. But are they just handing out loans to anyone?
That's a crucial question.
Yeah, how are they assessing risk?
And their prospectus does address it.
Okay.
They emphasize their rigorous credit assessment process.
Okay.
Using a combination of traditional credit bureau data and alternative data sources like user behavior on their platform.
So it's not just about your credit score.
No, it's not just about your credit score.
No, they're also analyzing your spending habits.
Exactly.
And how you interact with their app.
Exactly.
It's like big data meets microloans.
That's a great way to put it.
Yeah.
They're leveraging technology, not only to provide credit,
and also to manage risk.
But also to manage risk.
Okay.
Now let's shift gears and delve into Company B's prospectus.
All right. Company B.
Their narrative is all about painting a grand vision for the future of digital payments. And they're aiming for global domination.
Global domination, huh?
Yeah, that's the vibe I'm getting.
They're not just content with conquering the Indian market.
No.
They want to take on the world.
They want to take on the world. Their projections for the digital payments market are astronomical.
Right. We talked about that earlier, that USD 60-70 trillion figure.
Remember that USD 60-70 trillion figure? And they position themselves as key players in this digital revolution.
Okay, but let's pump the brakes for a second.
Okay.
Those are just projections.
They're just projections.
And the competition is fierce.
It is very fierce.
They're going up against
so seriously established players.
Right.
Not to mention the global giants.
It's a David and Goliath situation.
It is a David and Goliath situation, but they seem undeterred.
Undeterred.
Their strategy combines financial inclusion, just like Company A, with a strong emphasis on technological innovation.
So they're targeting those underserved markets while also trying to out-innovate the competition.
Exact.
I think a two-pronged attack.
It's a two-pronged attack.
Right.
Their prospectus dives deep into their technology platform,
Right.
highlighting its ability to handle massive transaction volumes
Okay.
and adapt to evolving user needs.
Makes sense.
They talk about their user-friendly mobile app, their secure payment gateway,
Right.
and their commitment to data privacy.
Okay, so they're really trying to position themselves as the tech-savvy option?
Yes, they are.
So they're building the spaceship for this global conquest, so to speak.
They are.
But what about the fuel?
Yeah.
How are they building the network to support this ambitious vision?
They're actively building partnerships with merchants of all sizes across various sectors.
Right.
They understand that a successful payment platform needs a vibrant ecosystem where both consumers and businesses benefit.
It sounds like both companies are pouring a lot of resources into building robust platforms and attracting users.
Yes, but let's be honest. These prospectuses are filled with dense financial data.
Right.
And I imagine
even seasoned investors
might
get a bit lost.
In the numbers.
Yeah.
You're not wrong. It can be a bit overwhelming.
It can be very overwhelming.
But that's where we come in, right?
Yeah.
We're sifting through the jargon and highlighting the key takeaways.
Yeah, we're like those prospectuses whisperers.
We are the prospectuses whisperers.
Translating the financial speak into plain English.
Exactly.
But remember, investing in IPOs always carries
some level of risk.
There
are no guarantees of future performance.
No matter how impressive the projections might seem.
It's all about doing your homework.
Right.
Weighing the risks and rewards. And deciding if these companies align with your personal investment goals.
Right. It's not just about numbers.
No.
It's about understanding the stories these companies are telling.
Yes.
And deciding if you believe in their vision for the future.
Well said. And speaking of stories, both companies tap into this bigger narrative of India's digital transformation.
It's
a story of rapid technological advancement.
Right.
Changing consumer behavior.
Yeah.
And a government that's actively promoting
a cashless economy. It's fascinating how these companies are trying to position themselves as key players in this evolving landscape.
It's an evolving landscape.
They're not just riding the waves. They're trying to steer it in their direction.
That's a great way to put it. They're trying to be the captains of their own digital destinies.
Now, as we wrap up this segment, I'm curious, given everything we've discussed, what stands out to you the most about these companies?
That's a great question.
What are those aha moments that you think our listeners should really pay attention to?
For me, it's the contrast in their approaches.
The contrast in their approaches.
Company A is already profitable, which is impressive. But their reliance on those lending partnerships
and those past financial hiccups
raise some concerns.
And Company B is going for this massive global vision.
Right.
But they're facing intense competition. And inherent security risks.
It's a classic tale of two different paths to success. Exactly. And it highlights the importance of considering your own risk tolerance and investment goals. Are you looking for a company that's already generating profits, but might have a lower ceiling? Or are you willing to bet on a company with more ambitious plans?
But potentially higher risk.
It's
all about finding the right fit for you.
Exactly.
We'll be back to wrap up our deep dive.
And leave you with some final thoughts to ponder.
Welcome back to our deep dive. We've been dissecting
these two fintech companies.
Going from their big picture goals all the way down to the nitty-gritty
of their financials and strategies.
But there's one more piece of the puzzle. We need to examine.
What's that?
The human factor.
Human factor.
You're absolutely right behind all those numbers. Projections.
And projections
are the people.
The
teams driving these companies forward.
Right. And both prospectuses offer some intriguing glimpses into the leadership at the helm.
Okay, so it's time to meet the masterminds behind these companies.
Let's do it.
What are we learning about the folks calling the shots?
Company A's prospectus really puts their founder and CEO front and center, portraying him as this visionary leader with an intuitive grasp of the Indian consumer. They talk about his entrepreneurial journey, his passion for technology, and his commitment to empowering consumers.
It's a very personal...
It is very personal.
Almost inspirational narrative.
Almost inspirational.
So they're banking on the founder's story to resonate with potential investors.
Right.
Like saying, invest in this company, and you're investing in this driven, passionate individual.
Right.
But what about the rest of the team?
Okay.
Is it a one-man show? Or does he have a solid group backing him up?
They definitely highlight their management team as well, showcasing a mix of seasoned executives and some younger talent. They emphasize the team's diverse experience across various sectors, from finance to technology.
So it's like they're saying, we've got the experience to navigate this complex fintech world.
Exactly.
Okay, so they're presenting a team...
with both vision and experience.
With both vision and experience. Okay.
What about Company B?
What about Company B?
Okay.
Yeah. Are they taking a similar approach?
In their prospectus,
yeah,
Company B takes a slightly different tack.
Okay.
Their focus is less on individual star power and more on the collective strength of their leadership team.
More about the power of the collective.
The power of the collective.
Interesting.
They emphasize their shared vision for the future of digital payments and their diverse backgrounds.
Including global experience.
Including global experience.
Did they give any specifics about their team's track record?
They definitely highlight their past successes in building and scaling businesses.
So like saying, we've been there, done that, and we can do it again.
Exactly. We've been there, done that, and we can do it again.
Yeah.
They also talk about building a culture of innovation, collaboration, and putting the customer first.
It's a story of a team united.
By a common goal.
And driven to make a real impact.
Driven to make a real impact.
Okay, so both companies are trying to instill confidence.
Yeah, in their leadership.
Yeah, but through different approaches.
Yes, through different approaches.
One is highlighting the founder's vision.
Right.
The other is showcasing a team effort.
A team effort. It's fascinating to see how these narratives play out in the prospectuses.
It really is.
It reminds us that investing isn't just about
numbers
and charts.
Yeah, it's also about believing in the people behind the company.
Exactly.
Absolutely. It's about feeling confident that the folks at the helm have the skills, the experience, and the drive to navigate the inevitable challenges and seize the opportunities that come their way. We've covered a lot of ground in this deep dive. We've gone from the macro trends shaping the Indian fintech market to the micro details of these companies' financials, their business models, and their leadership teams.
It's been quite a journey.
It has been quite a journey, and hopefully our listeners feeling a lot more informed.
Yes.
And empowered to make their own investment decisions.
Absolutely.
Remember, these deep dives are all about
giving you the tools and the insights.
Giving you the tools and insights to become a more confident and informed investor.
Exactly. We've provided the map.
Right.
Now it's up to you to choose your own adventure.
Choose your own adventure.
But before we sign off, I'd like to leave our listener with one final thought.
Okay. One final thought.
Both companies are operating in a space that's incredibly dynamic.
Right.
And fast-moving, the fintech landscape is constantly evolving, driven by technology regulations and shifting consumer behavior.
It's like navigating a jungle.
It is like navigating a jungle.
Where the paths are constantly changing and new obstacles pop
around every corner.
Around every corner.
Exactly. So as you weigh your options, consider which company has the agility, the vision, and the resilience
to navigate these uncharted waters.
Which company do you believe has the potential?
Yeah.
Not just to ride the wave of India's digital transformation, but to shape its course.
That's the million-dollar question.
That is the million-dollar question.
And ultimately,
the answer is up to you.
The answer is up to you. Happy investing.
Happy investing.
And happy deep diving.